Hello everyone and welcome back to Masters of Trading. Today we have a short video which will be a collective piece really on an indicator tutorial which will be our professional moving average, and also a small discussion on what is the DMA. So today in one of the chat groups I run, Masters of Trading chat group, we had somebody questioning what is the DMA. We had a few people pop up stating they thought it was the daily moving average, and from somebody's Google search they performed, they found that most of the results were daily moving average based. But from a professional trader's standpoint, the DMA is actually the displaced moving average. Now, the displaced moving average is quite essentially a moving average, and it's displaced, so it's offset either positively or negatively to shift the moving average forwards or backwards on the chart. So I'll just get rid of my face off here so we can concentrate on the chart. There we go. Fade over. Thank you very much. Okay, so let's discuss the chart first. We have the Bitcoin US dollar chart, and the data is provided by Coinbase, and it is the daily chart. So each candle represents 24 hours from the open to the low to the high and the close of the candle. Normal candles, not Heiken-Ashi, these are normal candles. However, as you may see, we have whip candles overlaid over the normal candles. Just a quick one on whip candles. Whip candles are engineered in a certain way where the chart uses the data from various time frames of the whip trend indicator that we created. So whip trend is created from the original wave trend, which is a fabulous indicator. However, I've adjusted the mathematics and made wave trend a lot more accurate for entries and exits, and I believe it's a lot more powerful. I think whip trend is in our Analyst Pro package. So if you're an elite member, you obviously have access to that. And if you're an Analyst Plus member, you might have to upgrade for access for whip trend. Whip candles essentially take the higher time frame whip trends and give the current time frame, the current candle, a power of the higher time frame whip trends added up. So for example, if we have 5 time frames and 4 of those higher time frames are bullish and 1 is bearish, you would have a +4 for the bulls and a -1 for the bears. So it wouldn't give you a full strength candle. It's only on a full strength candle you will have all 5 time frames screaming bullish and buy or bearish and sell. Whip candles really has to be used in context with other indicators, because if you just blindly sell your first bear candle, for example here, you would have spent a couple of days of sideways and then liquidation run by the big boys, and before the market continued a little further down. But that's just a little information on whip trend and whip candles. Back to the purpose of the video, which is the professional moving average, which we will do the tutorial on. What we are going to do right now is we will add this indicator. So this is the multi-time frame projecting moving average, and you have 3 of these. So we're going to show this, and what I've set it to prior to the video is this orange line is the 14 exponential moving average of the daily time frame. So as an example of what the DMA is, we're going to go into the settings. So just a quick one on the MTF projecting moving average is you can set the time frame, you can select the source, and you can select the moving average method. and you can also select the period. So for all of these, for example, we have the 14, but the moving average 2, which is the orange one. So here we can change the colors and line thickness and so on and so forth. We have moving average 2, EMA 14, orange. So that is currently on the chart. And for the purpose of this video, I've created moving average 3. So it's an offset. It's a displaced moving average. So if we go down here to visibility, we will click on show moving average. So this should be our red one. So this is our moving average 3, show moving average 3. Moving average 3 color is red. The moving average 3 data is here. It's the daily time frame moving average, and it's the source is the open, the method again is the EMA, and it is the 14. The coloring of the red, however, in this instance is displaced by 1. So what this means is that each plot of data is offset by 1 candle. So if we go to where we can see this point here, the next candle is where it's plotted. So we can increase this on the offset. So we can do it by 2 candles, 3 candles, or 4 candles. So for the example here, we'll leave it at 4 candles, close that. So here we have the 14 EMA, which is the official moving average of the daily time frame, and we have the DMA, the 14 EMA, which is displaced, offset by 4 candles. Again, here, if we choose this point, we go 1 candle, 2 candle, 3 candle, 4 candle, and the plot. So if we go back a little bit, I love whip candles. If we go back a little bit, we could have even used the offset, for example, and you can think of it as a bit like a giant stochastic. You've got the price moving up. You have here a bearish cross of the moving averages. You could have been putting a sell in this area here, and you would have been, you would have had your trade activated, and you'd have been in for that negative run there. So here we have the official 14 EMA. We have the 14 EMA offset by 4. And we'll go now into the professional moving average. And we will turn that on. This is displaced -4. So we can see again, if we go to a nice example point here, from this point, we have 1 candle, 2 candle, 3 candle, 4 candle. So here we have the professional moving average is offset by 4 negative, and the displaced moving average here, EMA, is offset +4. With this little setup, you can see the power of a trend trading system, for example, and it's something, the professional moving average is something that the institutions use, and this is why we've engineered it and created it for our members. So here we have, as I discussed earlier with just those two, we have like our traffic light system that we discuss. We have the green on the bottom, orange and red on top. So it's a bearish setup, and we need to be looking at sells. We can even identify this. So we have the bearish setup here, and we could have our trend line there. Sell a break, and you would have been in the trade all the way down here. Beautiful. And at this stage, you are so far away from the moving averages. So many bears in the market, all selling, and smart money accumulating. And here's your first green candle on wick candles, and obviously the market has a nice rally from there. Yeah, it's an amazing collection of indicators, really. But anyway, that's a bit of a discussion on what the DMA is, the displaced moving average. So now we'll focus on the professional moving average, which is this green line here. So this green line is the 14 EMA displaced by 4 candles to the negative side. And just from a quick glance at the chart, you can see how powerful it can be at either getting into a reversal, like in this instance, paired with the whip candles. That's a fabulous run down from the 9-3 to the 6-7. It's plenty. Wouldn't complain about that trade. And yeah, here we have beautiful head and shoulders there. Even gone on there. Yep. And then let's do another trend line. I'll just show you something, the official take on. So head and shoulders. Nice head and shoulders here. You could have counted this as a shoulder or this is a shoulder. I've gone for this, as it was a substantial move for liquidity purposes. Trend line going across. To make that an official trend line, we can move that there and that there. It's the same. And then this is the height from the neck to basically the high. Maybe even that one, if we're going to be picky. And then we can take this down from the breakout, which is there, and you have a good target. So people who trend patterns or traders who trade patterns would have identified the height there, which we have here. We've transferred it over, and you would have had a target, which was pretty much bang on. And again, I digress. But yeah, the beauty of this professional moving average is it is displaced negatively, but we also have engineered the projection. So this is the actual moving average, and we actually have projected from here 4 candles ago the moving average. So if price would have come down here, the moving average would have probably been, on this kind of angle here. Even if price came down to around here, this projection would be here because it's taking the average of all, the previous 14 candles with an offset of 4. So the projection, let's go into the indicator itself. We have here our input box. Excuse me. So here we have the method, and we can choose between various moving averages. We have the simple, the weighted, whole moving average, smooth moving average, and so on and so forth. We can choose our source, which you can take from whip candles, etc. But here are your main sources of price. And we can choose the period. So just for this example, I've changed the period from 14 to 60. And we have show shifted data on, which is our displaced data to the left. Now, one cool thing that I would like to show you here is the show projection history. So as you can see here, the printed line, the historical data is displaced up to this point, and we have our special engineered projection in. But we can see where this projection has been in the past. So for example, if our data had finished at this point here where the cursor is, the projection would be probably down here. But as the prices come up, it would have pulled the projection up. Projection history. So if we turn this on, whoops, sorry, double clicked. We can actually see where this projection line has been. So right now is a prime example of, you can see where the projection is. And this is prior to the actual printing of our data line. So when the market was down here, say for example, this the data was plotted to where my cursor is right here, the projection would have been around here, and then the projection would have been down here, projection would have been down here, then up here, and then, so this basically follows where the projection has been. Here we also have show original non-shifted moving average. So this will be the 60 AMA in its official form. So whenever you put the 60 EMA on a chart, that is what you will get. This is our professional offset moving average, and with the added data of the projection, where the projection would have been. And something also quite cool that Anton has added is the Bollinger Bands. And if we take off projection history, because we will have a look at that in a second, and we'll take off the original. But this is the Bollinger Band for our special offset professional moving average. And then if we turn the show shifted data off, and then we click on show projection history, this gives us, let's make all this a little clearer for us to see, and we'll go full, we'll go 2, oopsie, we'll go full on there, and we'll keep you orange, okay, and then we'll go U, and we'll go full, and we'll go that orange again for the OCD in me. Click OK. So this is plotting where, as I described earlier, where the Bollinger Band and the projected moving average would have been plotted at the time. And obviously here you can see the delay where the price is compressed here, compressed here, compressed here, and it's taken into this area here. This is a beautiful breakout in Bitcoin, and something we identified the first week into the month that we expected. So here's professional moving average. Highly adjustable, we can go shifted data, and then show projection history off and show Bollinger Bands. We can change the multiplier for the Bollinger Bands. We can make it smaller. Show the original, and so on and so forth. But yeah, here's the professional moving average, and it is part of the elite membership. It's the elite package of indicators, so obviously only elite members have access to this. And it's an amazing tool, and it's one that institutions use. So if you can get yourself into using something like this along with your other indicators for context, it will make you a much more complete trader. So that's about it for our video for today. Just a quick introduction to the professional moving average and a small explanation on what the DMA is, the displaced moving average. I hope you found the video useful, and we will see you again in the next one. Thank you very much.